Well, good afternoon, everyone. Thanks for attending. At the last count, we had somewhere near close to 300 people joining us this afternoon. So there's quite a bit of interest, obviously, in unpacking the PPP forgiveness process. And I would like to just give a little bit of background information. It's being presented this afternoon by Citizen State Bank. Steve with the SBA, Small Business Administration, is with us, and ASAP Accounting and Payroll. And between Citizen State Bank and ASAP, between the two of us, I'm proud to say we facilitated nearly 700 small business and nonprofit loans on the western slope of Colorado. So it was a great endeavor in a short period of time. I also want to give credence to the SBA. I always tell friends, if we had to spend $600 billion over a weekend, we'd have a hard time putting out all the rules and regulations ourselves. So they did a great job in a very short period of time. On our team this afternoon, Mark Betts is here. Mark is Vice President of Payroll and Operations and Senior Vice President of the company, and has been with us for about 12 years now. In addition to that, I'll turn it over to Doug in a moment. But before I do that, if you could let me look at the agenda just for a moment, if you will. I want to tell people the agenda. We're going to go over the legislation overview and forgiveness. We're going to talk about how to calculate and maximize forgiveness, the loan forgiveness documentation and timelines that are going to be required at the bank level. And then we want to try to leave enough time to a question and answer session. And with that, I'm going to turn it over to Doug Price and let Doug talk about his team.
Thank you, Richard. And I want to thank Mark and Richard from ASAP, Tracy from ASAP, and Olivia Ekstrom from our team for logistically pulling all this together. You see the group that's there. I would open with this comment about what we had, is that you had nearly $700 billion in funding that was distributed through a system that didn't exist 2 months ago over a very limited period of time. And I would, while the press may be critical, my line is the historians will be kind to what has happened. The ability to so swiftly get to the American people, and particularly small businesses that are represent over 43% of all employment in the United States. This kind of support is unprecedented in history, and it's no surprise that it can be chaotic at times. If anyone other than Steve White tells you they're an expert, that's an unlikely event, because this system is so new into its evolution that many questions will remain. And so my encouragement to everybody is to begin with common sense. As we went in, we'll leave this process. The idea that you had to spend at least 75% of the proceeds of your PPP loan or more on payroll and payroll related matters, and 25% or less on other qualified expenses. That has not changed at all. The other thing to think about is that in this group today, if our 220 loans and several thousand jobs supported is any calculus, about 84% of the loans by volume were by people who had W-2 as the core instrument, and about 16% were for sole proprietors and contractors. And that 16% is much smaller, obviously, when you go by dollar amount. So keep that in mind, and I think that will help everybody see which group they fall into. We have the benefit of having Mark, who's going to give us a more granular look at the 11-page application from the SBA. Jessica Frigetto is our Chief Credit Officer. Jessica and Alexander Price were the ones who basically created the engine at Citizen State Bank that allowed us to proceed and do 220 some loans throughout the country, mostly in Western Colorado. And finally, we have with us Steve White. And Steve is going to be our first up. Steve is with the SBA. He's been an invaluable member of our team. I think that in the early days of the PPP process, we could rely on Steve to be on phone calls at 9 o'clock on Sunday night. At one point in time, his supervisors made him take a couple of days off because he'd worked 100 hours over the course of a week. So to give you an idea of the kind of commitment we saw from the SBA, from Steve, who's our primary contact, all the way to Dan Norgren, who's the multi-state regional head, it was profound in terms of what the SBA did, and we'll always be grateful to you. With that, I'd like to turn it over to Steve White to give you an overview of the SBA's position on this, the history of the PPP, and the way we expect it to be discharged.
Thank you, Doug, and I appreciate the sentiments. Thanks to everyone at Citizens State Bank and URA, and thanks to everyone at ASAP. I appreciate the time, and for all those who have made the effort to be on the call, we'll make sure that you get some value out of this. And so I want to take just a couple of seconds to mention some numbers that are of note. Mr. Price pointed out we've had to write about $700 billion in lending, and what that equates to in SBA numbers is that's a little over 15 years of normal SBA lending activity across the nation. So we've done a lot in a very small amount of time. And anyone on this call knows that when you do anything, you're going to make mistakes. If you're not making mistakes, that's probably indicative of a low level of activity. So we have a high level of activity, and therefore we have a high level of some uncertainty, a few mistakes along the way, and hiccups and that sort of thing. But I think we've covered ourselves pretty well. To that end, for those of you who don't know, currently right now across the nation, SBA is employing over 5,500 lenders in the process of giving out the Paycheck Protection Loan and helping to administer the economic injury disaster loans as well. What that means is this: on a typical pre-COVID pandemic day, the SBA generally uses about 1,800 lenders. So we've had to bring on more than double the amount of SBA lenders than we've ever had to work with. And that is in the history of the Small Business Administration, which goes all the way back to 1953. And as Doug well said, so that meant we spent a lot of time bringing folks on board and making sure they were up to speed. And folks, I'm not sure the average business owner or borrower truly appreciates or may understand what the lenders were doing behind the scenes to make sure they were able and capable to take advantage of this program so they could in turn turn around and serve the borrowers and the business leaders. So this is one of the few times I've seen in our nation where folks at the federal government level, folks at the lending level, and business owners all operating in conjunction and working together to make something happen. So it's been, as someone who's proud to be an American, it's been really neat to see America perform during this time. To that end, just right here in the state of Colorado, in both rounds of the Paycheck Protection Program, we've made over 97,000 successful Paycheck Protection loan applications, totaling over $10.2 billion. So that's well beyond what we're normally operating at. And that doesn't even include the economic injury disaster loans, of which there have been over 430,000 applications on that end, to the tune of right at $38 billion. So we've been doing our best to make sure that entrepreneurs have been getting the right amounts of money into their businesses to make sure that we can not only safely operate and adequately operate through this time, but to make sure you've got enough to take care of your employees, which is the very purpose of the Paycheck Protection Program. You may know that this program opened up on the third day of April. So here we are, some 54 calendar days later, on 26 May. So in those 54 operating days, we've had no less than 48 FAQs put out by the Treasury. So the FAQs are frequently asked questions which provide clarification to the initial guidance. So we had the initial guidance, and then on top of that, in 54 days, we had 48 clarifications, which doesn't count 6 individual interim final rules that have been put out. And oh, by the way, no less than 4 SBA information notices. So that means at the federal government level and at the lending level, we're literally averaging more than one change/amendment/clarification per day to this program just in order to execute it and make sure that we're able to get the right amount of money into the hands of the right people. So when you look at it like that, it's fairly impressive. And so that brings us to today. So we put the Triple P into play early April. We figured out along the way how to enact that. We went through the first round in just a matter of days. We're now in the second round. We've got plenty of funding left in the second round of funding. We've moved to the ability for lenders to make a report up to the Treasury through Colson Services to make sure that they've got the loans in process so that they can receive due credit for the work that they've done on their end. And now we're switching phases. We're now into the forgiveness phase. And that's so today's phone call will cover that in some detail. I don't want to steal anyone's thunder, so I'll be brief and come to an end here quickly. But just know that so we are dealing with Section 1106 of the CARES Act. For those of you who are taking notes, it'll be Section 1106, Section B of that particular act. And what we're looking at is how to provide forgiveness for these Triple P loans in the guise of forgiving the payroll costs that are eligible, the interest payments that are eligible, rent obligations, and business utility payments. And then we get into the loan forgiveness process. So again, in the guise of not stealing anyone's thunder, we've got a very capable staff on this phone call. Thank you again for letting me have a couple of moments. I'm going to hang around to try and answer as many questions as we can. There are, of course, as we go through a change per day, some questions I won't be able to answer. That's okay. We'll take notes and we'll get them. And as soon as we have those answers available to you, we'll send them out. So thanks, everyone.
And with that, let's turn it over to you, Mark, to walk through the more granular view of the app and the things that you need to cover in more detail.
Sure.
The other comment I'll quickly make is that we had prior to this session about 40 questions, and we've grouped those together. We have a Q&A form that you see up on the top of your Zoom meeting. I'm sure all of you have become Zoom experts at this point in time. So we'll monitor those throughout. And those questions that get answered in the presentation, I will tick off, and those questions that do not, we'll ask at the end. So let's get to it.
Sounds good. Thanks, Doug. And thanks for coordinating this with us. So there's a lot of guidance that came out with the May 15th release of the 11-page application. And from what we understand, and I'd be interested in Steve's knowledge on this at some point, is there was additional information in an interim final rule released late Friday night, just this past Friday, and we're expecting additional FAQs to be posted this week as well in the FAQ guidance on forgiveness. So that kind of puts us in a I don't know what kind of position, but so I've chosen to kind of rework this and focus on kind of these items in particular, the ones on the bottom, because it seems to be what everyone, all the questions I'm fielding and our team is fielding on a daily basis tends to be around the FTE count methodology, the salary wage comparisons steps, some of these safe harbor provisions, and then the non-payroll expenses. And so we're going to kind of cover those items at the bottom in more detail and touch a little bit on the loan application itself. The loan application that was released on the SBA by Treasury through the SBA is 11 pages, and a lot of it is instructional pages. And there's a lot of fine print in the instructions that help give definition to some of these terms and how you're supposed to go about the process. We're going to spend most of our time in this presentation on the Schedule A worksheet, but do know that I think Jessica, from the bank and the lender perspective, they're going to be looking at primarily working with you on items 1 and 2. So there's a loan forgiveness calculation form. It is 1 or 2 pages. And then there's the PPP Schedule A. And then in addition to that, there's a Schedule A worksheet. And the Schedule A worksheet is very important, and it will help you tabulate some figures that then will be put on certain boxes of the Schedule A. So it's kind of while you need to start with the first calculation form, in order to reach those numbers, you have to go all the way down into the Schedule A worksheet to build it up. There's also an optional demographic information sheet if you have time to complete as well. Looking at the guidance from the 15th, the biggest thing that stood out from that was the FTE calculations. The Treasury put out determined that a full-time employee is based on 40 hours or more a week. At first, we were in the accounting profession, and in the payroll software side, I think there was a lot of people hoping or thinking that the guidance was going to be based on 30 hours. So if you heard that message early on, that has changed. It is based on 40 hours a week. And then we also got a little bit of highlights from the salary wage comparison methodology that we'll cover a little bit, and touch base on these safe harbor provisions. If you can jump forward for me there, Tracy, that'd be great. So here is the Schedule A worksheet. It is within the packet of the 11 pages. And there's columns on here I'm just pointing out here. And the first one I'm pointing out here is the cash compensation. So the whole worksheet has two tables, and you're going to divide your employees into two different groups. The second table, which we'll cover in a little bit, is for 100,000 people that have earned 100,000 in a pay period in 2019 on an annualized rate, that is, and they go in a separate section, mainly because you're not going to do a salary wage reduction comparison. Anyway, so in this Schedule A worksheet, you'll notice that they want you to identify the employee's last four of their Social Security number as their identifier, and the employee's name, and cash compensation. And so let's move a little bit forward to the next screen so we can look at my notes on this. But this comes directly from the application itself. So the cash compensation is going to be any earnings, whatever wage types you use for the most part, including tips if you're a restaurateur, commissions, standard paid leave, so standard family, standard vacation. The ones that are not included are these new earnings types that were passed in the Families First Coronavirus Response Act. It's a mouthful, but in most payroll companies, but you will exclude those from your cash compensation levels. But it is any compensation that is considered wages, for that matter, going into that cash compensation received during that 8-week period. If you can move one slide forward for me there, Tracy, that'd be great. So as I was mentioning, there's two tables. So keep that in mind. You're going to split your employees into these two tables, 1 and 2. And if you can move one more slide for me. So the employees in Table A are anybody that was employed during the 8-week period who received less than 100,000 annualized compensation, or anybody that was paid at all during 2019, if I'm saying that correct. And so it's going to look a little funny because you'll have certain people that will be listed there but not have a cash compensation. So if they were employed in 2019 but not in the 8-week period, they'll be shown there. And that gets into the FTE calculations and other items that we'll get into. And then Table 2 is going to list out everyone that was 100,000 or greater on an annualized basis. You can move forward one more time. So one of the biggest questions and hurdles is over this average FTE column in here. So prior to this release last week of this application, I know a lot of the software companies behind the scenes were working on essentially retrofitting the Affordable Care Act forms for compliance purposes. And I don't know if they'll be able to accomplish that. I know there's a lot of struggles. We're struggling on our end for two reasons. Because one, all of this average FTE calculation data is going to be based on employees' earnings on a weekly basis, on average over that 8-week period of time. And as well, looking back to determine your baseline periods of FTE on average over an 8-week period of time. What this worksheet is showing us is that they want you to perform the calculations so that each employee would have an average FTE component, and then you would add and summarize them up at the end. Some of the payroll softwares were looking at it a little differently, and they were taking each payroll or each month, and even some of the timekeeping solutions were looking at it on a weekly basis and giving a score for the company overall for that week, rather than it being tracking that one employee across that 8 weeks. And so that's a little different in the math and how you may focus on it. But it's actually, now that we know this, so we're kind of essentially lining up to where, and I don't know if I made it into this slide presentation, where you're going to have an Excel file. If you can move to the next slide. Is there one more slide in this, Tracy? I'm sorry. It looks like it didn't make it in. So there was a simplified calculation that I was hoping to show you guys, and we'll show you after this presentation, and I'll try to send it around as well. But essentially, you're going to have to track the employees' hours worked across that entire period. I apologize, everyone. Tracy, if you can move forward 2 more slides, perhaps. There we go. So this is what I was hoping to jump to. So determining the average FTE count and comparison levels is really the heart of what we're after here. So first of all, the FTE reference period is for the baseline target that you're trying to reach. So as an employer, what you need to wrap your head around right now for forgiveness, and everyone's trying to maximize forgiveness, is first of all, what's my target? And so your target is going to be a reference period of, and this is based on days worked at this point. So looking at your time card information from February 15th through June 30th, 2019 to calculate that FTE number. Also, you're going to want to calculate that FTE number from January 1st through February 29th, 2020. So you can use, the guidance says you can use the lowest count from either of those 2 periods. There's also an option for seasonal employers, and you'll want to confirm this with your lender to make sure you meet their rules for seasonality. But you may want to say, well, my winter season is very different from my summer season. I would like to use my summer season calculation versus my winter season calculation. So you may want to look at a 12-week period starting on May 1st or any time between May 1st and September 15th, 2019. That may be something you want to reference and discuss as well, because that could be more favorable to you in terms of forgiveness if it generates a lower number.
Mark, let me interject here real quick. On the questions we got in advance, I want to bring everybody's attention to this. About 10% of all the questions we have are really about this determination of FTE count and comparison levels. So I want to make sure I bring this clearly to your attention. We have a little over close to 250 people on the phone right now, but this is the biggest question we've been asked. The second is going to be about sole proprietors, but this calculation is going to be critical to what you look at moving forward.
Yeah. And so at first we were trying to give our clients a baseline number based on pay period data. And the hurdle that we've found is, we get data from employers that pay on a monthly basis, on a semi-monthly basis, on a bi-weekly basis. Hardly ever in Colorado does anybody pay on a weekly basis, because it's more of an East Coast thing or a construction industry thing. But most employers pay either bi-weekly, semi-monthly, or monthly. So for us to just look in our payroll software, it's not easy for us to determine this. You actually have to pull it from your actual time cards or timekeeping information. And for some smaller employers, those time cards are pretty rough, if you know what I mean. So there'll be a lot of work spent on making sure that the data that you're using is is accurate at the start so that you can run good calculations and come to a baseline FTE reference number. Now, the guidance from the application also spoke to a simplified calculation method. So here we're getting into the second section here. The standard way of calculating this would be to, as I showed in this picture underneath here, is taking the hours for each employee over that 8 weeks, averaging them, and you can't give credit more than 40. So if someone works overtime, it still counts as 40, not more than that. So you would come to an average, and then you would essentially divide that average by 40 to reach the average FTE for that employee under the standardized calculation method. And so in this standardized calculation method, we get a 0.96 for this employee over their work for that 8 weeks. The simplified calculation method is saying that anybody working 40 hours or more, you can count as one full FTE. Anybody working less than that is considered part-time. And by the ruling, so that could be 39.5 hours, they'd still be 0.5. So the simplified calculation method for this employee comes to a different total. The average FTE under the simplified calculation comes to a 0.81. And so going back to that Schedule A worksheet that we were showing in the prior slides, you can't pick or choose, from my understanding. You have to choose one calculation method for all your employees across all of these reference periods, across the 8-week period of time that you're using the funds, and use that same calculation method for your FTE reference baseline periods, as we mentioned here above. So just keep that in mind. You may end up having to run a lot of calculations to determine which is going to, support your business the most. That's a little bit more work than it may need to be. If you're a smaller employer, it shouldn't be too hard to work those up. But larger employers or with a lot of turnover employment, the restaurants are going to be a lot harder to calculate. They have a lot of turnover. They're going to have to be looking at this data on employees from 2019 that they haven't even had on their payrolls for a certain amount of time. So it's going to be a lot of calculations behind the scenes, but it's going to have to occur from the time card information. Did we skip over anything in those prior slides? So for each employee, nearest 10th. Okay, so I think, and this is in the instructions, so we can move forward a little bit past that slide. So once you've completed that averaging, you'll total it up, and then you'll compare it, and this goes on the Schedule A, and this is the bottom section of the Schedule A on page 6. So this is where you'll have the reduction calculation occur. And so it's in this section, and it's spelled out on this page. Okay, so if we can move forward a little bit more. So the reductions, there's some exceptions to reduction to keep in mind. And these are ones that there'll probably be some more guidance on, I hope, in the FAQs, because they did a pretty good job in spelling them out in the paragraphs in the 11-page application. But as we know, there's a lot of different employment situations, and sometimes that you want to make sure that what is occurring for you and that's your business is actually covered under that exception. So if you've made an offer of employment to bring someone back and they've declined, which we've heard quite a bit about because of the unemployment, the $600 additional unemployment, some people are saying, I'm not really anxious to go back to work. Well, if you've made that offer and they've declined, and you have a written offer for them to return to work that they've declined, then you won't be penalized for that employee not returning, for instance. They added that exception. So that is to the benefit of employers to try to look at those reduction exceptions, make sure that you're not missing any of these, because these can go to work to your favor when you're trying to maximize the loan forgiveness. If during this 8 weeks, someone is, you have to lay off someone, not lay off someone, fire someone for cause, that's not going to be held against you. You still have to operate your business, and not just think you have to keep someone on payroll just so that you can count them as an FTE. If they've done something to warrant, termination, you are within your power as a business owner, and it's not going to prevent you from doing that. Also, if someone resigns and leaves you and says, I'm moving home or going away or whatever, they voluntarily resign from work, that won't be held against you. That's an exception as well under these terms. Also, if they voluntarily requested a reduction in hours, that's a component. Now, those are the exceptions for the normal standardized FTE calculations that we went into, which is that whole averaging over 8 weeks. Moving down a section here, let's talk about this safe harbor. And a safe harbor is going to, protect you from that storm, essentially, of this. I've done these FTE calculations. My restaurant's been closed. My retail shop's been closed. And I can't come anywhere near the FTE calculations I had in my baseline period. What do I do? I'm not getting nearly the amount of forgiveness that I needed to. Well, there's an FTE safe harbor provision in here designed for that situation. So let's say we go into June here in Colorado and we all stay safe and we're able to open the economy back up, open for business essentially, then hopefully by the end of the month, this safe harbor would be something that you as an employer would want to look at, because you would want to understand, if I bring my employment levels back up to where they were in a prior period, prior to COVID, essentially, then, you'll get a safe harbor provision for additional relief from that calculation that I was explaining earlier. Doug, Tracy, did I explain that confusing enough to everyone on that safe harbor? But it's a provision that I think a lot of employers, unfortunately, are going to have to wait and see if that helps them more than the standard FTE component, because they've been closed for business, essentially. And we can go into that in the Q&A a little bit. There's a lot of questions that I think will come out of the FAQs. I'm hoping there's still a little unclearness on that safe harbor in terms of, is it 1 day as of June 30th, or is it that work week? And then are there any requirements beyond that, or do you have to just employ them full time for that work week that included June 30th? That's some of the areas that wasn't spelled out yet. At this point in time, I'm assuming it's going to be, you've hired them back for a work week, because FTEs essentially are calculated not on a daily basis, but on a work week basis. So keeping with that logic, but that is pure speculation on my part. We're waiting to see if there's additional guidance.
Hey, Mark, let me pause for a moment while we're on this FTE issue and see if Steve White has any guidance about how the SBA staff is being trained on these matters. And then let's go ahead and catch a couple of the FTE questions that are up there. So Steve, how are you guys being trained with respect to FTE and FTE tolerance on the forgiveness?
Yes. So basically, SBA, with one exception, is trying to be very forgiving in this calculation, and the explanation has been solid and on point. We were expecting for business owners to be able to use that 30-hour a week, but folks at many levels above us made the decision that the FTE will be the 40-hour a week. And just as you said, there's a couple different ways there to calculate what the FTE percentage is going to be. However, I think that the exceptions now that are in place are pretty solid, in that if you're not able to rehire or hire folks to fill those positions, basically if the FTE calculation is the fault of the employee and not the employer, so long as you've got adequate documentation to show that, you're not going to be held accountable for that. So that amount won't be calculated against your forgiveness. And the other part I want to reiterate at this time is that this is not by any means a gotcha program, while the SBA will be reviewing some of the triple Ps, so long as the business owner and the lender can provide documentation spelling out why you did what you did, what your calculations were based on. You're matching up the timeline. Your application timeline meets the forgiveness application timeline. Your documentation for employees, both an FTE calculation and wages, again, as long as those match up and you can show that, then that's what we're going to go with. You certify that it's true to the best of your ability. The lender certifies that it has that information, and then you go on from there. And that's the way the SBA is going to look at it. The SBA just wants to make sure that the documentation is there to show that you have proven what you said that you're asking for on both the initial application side and, again, for the loan forgiveness side.
Okay, Mark, thank you, Steve. Mark, there's a couple sets of questions. One is that sometimes cash compensation. So will you, and maybe Steve, review for everybody qualifying payroll expenses? So that when we look at that, the range of things that are
Sure.
included.
So we are looking at it based on gross wages paid during that payroll. So it's before taxes, gross wages. So hourly earnings, salary earnings types, including commissions and tips. All of those items essentially are what's going to be in terms of payroll, applicable payroll cost for this period of time. There's a few exclusions from that. Income over 100,000, which what we've done is we've been advising people to take 100,000, divide it by 52, and multiply it by 8 for 8 weeks, and that's how you get to that 15,385 number.
Yes.
Okay. Mark, talk to
us
a little bit about healthcare, 401k, the range of other compensation that gets looped into compensation, and where does that show up?
So that shows up later on. It's not on this cash compensation column of the Schedule A worksheet. It's in a different page on, I think, the Schedule A, if I'm not mistaken. I have it over here somewhere I can pull, but it's a different table that you'll do, not on an employee by employee basis. Essentially, that'll be in a lump company sum.
Let me let you finish, because I was just trying to field the questions as they came in. We have 23 open questions. I'm trying to loop them in. So let's see if we can get through the rest of your slides so people can have comfort.
Sure.
Answer those moving forward.
Yeah, and we can always, I will spend some time tonight or this afternoon going through those questions that we don't get to, and I'm happy to do an FAQ and send it out to everyone after this with you, Doug, the ones we don't get to on this call. So the other area that everyone's concerned about is the salary wage reduction area. If you can move forward, Tracy, about 4 slides. And I would be interested to hear Steve's info on this if possible. Let's see here, because this is the area where people were going, wait a minute, is it based on earnings or is it based on their hourly rate that I calculate this? So for instance, if I hired somebody at $20 an hour, and then they used to work full time for me, and right now I brought them back to work, and they're working part time for me at the same pay rate of $20 an hour, but because they're working reduced hours, their compensation won't match up on a dollar for dollar basis, but on an hourly rate basis, their compensation didn't change. I didn't cut their pay. They're still making $20 an hour. I just have less work because of COVID, which a lot of people are wondering how are they supposed to make this annualized calculation for this period of time. And so essentially this is an area that I'm pushing back and waiting to hear from further guidance on. If you can move forward a couple of screens here, so because we're out of time, Tracy, if you can move forward a little bit. So there's is it based on total compensation? Does it include tips, or is it purely based on their hourly rate or their annualized salaries? And then also there's a reduction safe harbor for that provision as well, which we'll have to go into in a deeper dive presentation at a different date, but it looks at these other alternative periods of time. And then moving forward, just so I can wrap up and we can get in more Q&A and over to the bank, there's an alternative payroll covered period, which I know Jessica's going to go into. Right now, it can be used by employers that are biweekly, essentially, or weekly. But the application said biweekly or less or more frequent, and so that may change. But right now, that doesn't allow you to use the alternative payroll covered period if you're semi-monthly, which is a lot of employers out there. So keep that in mind. If you also use the alternative payroll covered period, the 8-week period doesn't change for other non-payroll costs. Also, which a lot of questions are, is the payroll cost incurred? And so we're seeing this based on the employee's day of work. And so there's some information that came out that said if your last payroll, for instance, falls on a check date outside of the 8-week period, it's okay to use that so long as you pay it on the normal scheduled pay date. And so long as that pay period's earnings were based on the work day of when it occurred. And then similar for non-payroll cost eligibility on the next slide, Tracy, we're looking at that as if your normal billing date, if let's say your utilities come in for June and you don't get the invoice from the utility company until July, but the service date was in June, it appears you can use those costs even though you paid them after the 8-week period because the billing cycle for that invoice was outside the 8-week period, but the costs were incurred during the 8-week period. And I'll turn it over to anybody else now.
Well, let me make this recommendation. We want to have Jessica go through how the bank will look at it. Mark, would you go ahead, and I think that you, Tamara, and Kara are looking at the chat. Will you go ahead and review the questions and make sure that as we go through, you come back after Jessica and then just answer those questions about FTE. There's about 31 questions. Just go through and make sure you've got those so that we can systematically cover those. And with that, why don't we turn over to Jessica Forgetto. Jessica is the Chief Credit Officer at Citizen State Bank, and we'll talk about how how the bank will look at discharging its duty. I think the key thing to remember is that you're going to make an attestation, and we're going to try to verify it. But at this point, the attestation is on the borrower, not the bank, to do the best effort moving forward. With that, Jessica, let you go forward.
Hi, everyone. Thanks for joining us today. So I'm going to start on page 2 of the slide. So for the 8-week forgiveness period. So if you're a Citizen State Bank customer, you originally probably started this process with one of our 4 lenders. We have currently divvied all of our applications up over 8 other officers, or 8 officers, including those 4 lenders, to contact you on a weekly basis. So this should be, I think we have done 2. This will be our 3rd week of releasing material to you, just educational material to help through this forgiveness process. So you should be hearing from one of us. If you're not, make sure you reach out. The end date of your covered period is 8 weeks or 56 days from when your loan was dispersed. That is the definition of a covered period. That's also for non-payroll costs. As Mark mentioned, if you distribute payroll biweekly or more frequently, you have the option to start the 8 weeks on the first day of your first pay period following your disbursement date. So for example, if your disbursement date was April 10th and your first payroll was April 15th, you could elect to use that as your beginning for your 8 weeks for your payroll costs. That is currently listed on page 1 of the application, is where you can find this definition. That could change. I'm not saying necessarily that it will or it won't, but the Treasury could release more guidance in reference to that because it's currently just found on the application. The only more frequent payroll would be if it was weekly. Biweekly is if you're doing 26 payrolls a year versus the difference on a semi-monthly payroll is only 2 payrolls a month, so 24 payrolls in a year. If you have any questions regarding, or if you're not sure what types, if you're biweekly or semi-monthly, I would just defer you to talk to your payroll provider to make sure you understand. On the next page we also have is our just forgiveness timetable. This is just to give you an idea if you haven't been thinking a lot about when your forgiveness end date could be. This is really just from your funding date. So if your funding date was April 13th, for example, your end date 8 weeks later would be June 8th. That's just to give you an idea of this time frame because we're all at different stages in this application and forgiveness process. If you could go to the next, thanks, Tracy. So what you need for forgiveness. So you're going to complete the loan forgiveness calculation form, the PPP Schedule A, and then also your documentation showing your number of full-time equivalents, your FTEs, as Mark talked about. So for payroll documentation, I would suggest providing bank statements or payroll reports. Also any tax forms that could be applicable, 941 or 940. Also any payment receipts, so canceled checks, account statements documenting employer contributions and employee benefits. Also your health insurance statement if you pay for health insurance. Also your proof of retirement funding. So when you send us your invoice, for example, for health insurance, I would also just include a copy of either your statement or if you use a check to pay for that, or if it automatically comes out as an ACH, just showing where that has been paid. For non-payroll costs, so non-payroll documentation, business mortgage interest payments, so that could be an amortization schedule from your lender, lender account statement. Most lenders will send out a billing notice, and it could cover that as well. You could always just call your lender and ask for how much interest was paid and get proof of that. Business rent or lease payments, so for example, a copy of your lease agreement or your account statement. Also, Steve may be able to highlight on some of these, but my understanding is that personal property is included on that. So any interest or leases. So for example, if your office has a copier lease, you can pay that could be included. Also, if you have an equipment loan, your interest on that equipment loan could be included.
And one of the questions that has been frequently asked is on utilities, cell phones, things like that. Would those be included in utilities?
So on cell phones, I have seen customers do them as part of their stipend for, same with housing, if there's a housing allowance or cell phone allowance, because that's part of those gross wages. I think it's going to depend on how your company pays for that, if it's a utility or if it is included in payroll.
And then the same as the question was a car lease. Steve, is that any leases and other things like that that are legitimate business expenses? Are those considered to be utilities or allowable expenses?
Yes, so the allowable expenses of the non-payroll costs are going to be the business rent or leases, the mortgage interest, or if your business is out of home, your personal property would count there as well. Not the principal part, only the interest part of that. So you're looking at, yeah, your telephone bill, your internet bill, potentially depending upon your business / industry. Yes, the leases on vehicles would count as well. So your typical leases, your water, electric, gas, phone, internet, and that sort of thing. Those are going to be the forgivable up to 25% of the amount non-payroll cost.
And as we go through this, Jessica, we'll get back to you, but Mark Betts is doing a great job of answering questions. So for those of you who are multitasking or have asked questions, Mark is typing as fast as he can to answer those as well. So do read those as a part of what we're doing. Thanks. Go ahead, Jess.
And the last item I know has been talked about a lot. Mark and I touched base, and Richard earlier about this. Steve, feel free to comment if you'd like. Is regarding sole proprietors. So sole proprietors, sole member LLCs that function the same essentially as a sole proprietor through Schedule C or Schedule F. On page 5, line 9 of the application, it specifically states that you can enter any amount paid to owners, owner employees, a self-employed individual, or general partners, and that this amount is capped at $15,385. You heard Mark mention that amount earlier. It's the 8-week equivalent of $100,000 per year. So you're able to enter that amount. So my suggestion, if you complete that line item, if you're self-employed or as a sole proprietor, and then provide to your lender proof of that payment. So for example, if you wrote yourself a check for that compensation, it would be a proof of that check or a bank statement showing that transfer. Also, items that I think I would like to see, as well as I'm encouraging all the rest of my lenders, is if they can get, for example, an updated profit and loss or year-to-date profit and loss, just showing that income and expenses compared to the information that we would have had on a 2019 Schedule C or Schedule S.
All right.
Steve, do you have any other better guidance on sole proprietors?
No, that's pretty much on point right there. I would just remind, so the Schedule C filers in this category, now you're going to be capped by the amount of your owner compensation replacement, which is going to be based on your 2019 net profit. Also, in the case of partnerships, general partners are going to be capped by the amount of their 2019 net earnings from self-employment. So they're going to take that number, they're going to multiply it by a factor of 0.9235 to get that forgivable amount. And a reminder for the self, no additional forgiveness right now is provided for retirement or health insurance contributions, and including Schedule C filers and general partners, because these expenses are typically paid out of the net self-employment income amount. So that we're still working out exactly how that's going to work, but right now we don't have forgiveness portion for that.
Jessica, you're done, I think, with that, and we're because this is awkward because chat is so verbal chat with 300 people is hard to do. But looking at the questions, Steve, a set of questions moving forward. There are a lot of questions about prepaids. So can I get to the end of the period and I have extra cash? Can I bonus my employees? I think that we're expecting a bonus to be something if it's organic, meaning it's within the context of what you've done in the past, that's probably supportable. But if you were to bonus something to simply prepay, that would probably not be supportable. What's the position that you guys take at the SBA?
Yes, so for the compensation part, the prepays are not going to be allowed. It's either got to be incurred or actually paid via disbursement, whether that's check or ACH activity or what have you, or it's going to be included in the next upcoming pay round if you're using the alternate schedule. So that's okay. So if you want to include during this time that you've had to institute bonus/hazard pay for your employees to come back since they got to wear masks and take extra precautions, and maybe you're doing extra cleaning that's not typical, as long as you can document that and show where the extra pay is justified, absolutely. What we're looking for you to not do is try to just use this as a stop-fill gap to make sure that you're eligible just for the forgiveness portion. But if you want to reward your employees adequately and you can demonstrate past performance of having done so in like manner, yeah, absolutely, that's acceptable.
And one of the questions that we've gotten is the same on prepays of rent and other things or mortgage. You have to demonstrate that you've paid those expenses for the covered period. You can't prepay 3 months of rent, for example. That would not be allowed. But if over the course of the 8 weeks, if you've paid your rent, that is a permissible expense, but not a prepay, correct?
Absolutely. The only exception to that would be, for example, some folks are set up on a schedule where they pay utilities quarterly. So 4 times a year you're paying for typically it's trash and sewage and that sort of thing. In that case, you're actually incurring the expense And so you would do that, and you would prorate it to make sure that you're only paying for that covered period, or those 56 days. So as long as the 56 days are prorated there, you're fine. But yeah, otherwise, yeah, you can't really prepay.
The other thing I'll go through is again on repetition is good, because none of us are always on the same page. Mark, going back to you, there's a number of non-CAT expenses, payroll, taxes, 401k. Go ahead and walk through permissibility of payment for those items.
Well, the 401k is a good one let's start with that, and the employee health insurance. So the way we're proceeding from an accounting standpoint is to get the invoices from the healthcare, let's say Anthem or whoever's your healthcare provider. They're going to come on a monthly basis. And so I don't know the length to which you have to prorate for the 8 weeks, but for instance, it should be more or less 2 months of health insurance invoices. And so you may say that our company, for instance, you may say, okay, we pay 80% of the employee's health coverage directly, but the employee pays 20%, and then the employee may pay for their dependents as well. So you're looking for the true expense paid by the employer after the employees have already contributed their money. So it's not the total health insurance invoice from Anthem. It's going to be Anthem's health insurance invoice less whatever you deducted over that 8 weeks from your employees to offset their portion of the health benefits. Similar to that, on a 401k basis, it would just be the employer match, essentially. You're going to pay the full amount after each payroll to your 401k company, but you're not going to get credit for what was deducted or deferred from your employees' checks for their 401k. It's just going to be the match that you're looking for.
I want to go a process check. It's 2:59 right now, and generally speaking, our panelists are available to go longer and answer more questions. So we'll continue at least for the next 10 minutes and longer if we see that the attendance remains as high as it is right now.
Well, with Steve, is there any questions that we want to address to him while we have him as well? Because I can stay longer, but I'm not sure about him. I know there was a question on here about what employers can do. Is there a second round? Anything else that you've seen come across, Doug?
I think the big questions I've seen, Steve, would you address right now, this is for 8 weeks. And again, to be clear, the 8 weeks begins on the disbursement, unless I'm wrong. But basically, disbursement starts your 8 weeks, and there's conversation of extending the time to spend the money, but that has not happened yet. Is that correct?
Yeah, that's correct. So right now, you can begin your 8 week period. The borrower can either choose the date of initial disbursement, or they can choose the date of the first payroll activity and do the following 55 days for 56 days total there. So it's either date of disbursement of the PPP loan, or you can use the alternate covered period there. Now, so far, the guidance that just came out, it's still including only that 8 week or 56 day period. There is talk to extend that. I've heard rumors, and it's just that, rumors of extending it out to 12 weeks, but so far that's not solidified, and we don't have that from legislation. So right now we're just concentrating on that 8 week program.
I'm trying to figure out. Tamara Roach, I'm going to ask you to see the question. Can you ask in the January 1 or February 29 question? I'm not sure I understand what that is. Tamara, can you maybe scout that question before Steve leaves? Moving forward. It says 8 weeks and 3 days. Okay. Steve, any other things that again, I think that from our standpoint at the bank, we're going to try to be as commonsensical as we can. And for those of you who are our clients, Steve is our lead contact, and we're going to ask him these questions when they come about. But I do think the counsel to everybody remains this. the goal was to keep as many people employed as is practical. And the 75% to be paid to employees for wages and other auxiliary costs related to payroll is true. As long as you're paying 75% or greater, those expenses, that's what the design is for, with some other expenses to be thrown in. So our common sense is to be able to document leaving what you had going in. Is there you have any objection to that? This is a more complicated form than we'd expected, but that being said, common sense is still 75% minimum going in, 75% minimum going out. Is that correct, Steve?
Absolutely, that's 100% true. And again, for the applicants on your side, we get it. We went through a pandemic, everything was shut down. Chances are you did your best to maintain your payroll as it was. Chances are also pretty good that you weren't able to do that. So long as you can document that it was no fault of your own that you had to let someone go, that they you offered them the job to come back. They chose, for example, to stay on unemployment, or perhaps they went to work elsewhere, or whatever. So long as you are able to document and provide justification for the decisions you made, you're going to be fine. One of the running jokes in SBA, and this is before the pandemic, is that the S in SBA stands for documentation, and so does the B, and so does the A. That rule of thumb has never been more important than right now. So just document. If you can show what you did, why you did it, and even better, when you did it, you're probably going to come out on the positive side of things and have more of the forgiveness amount applied to your application. So that's exactly what we're trying to do. So just show where you use the proceeds in an eligible manner. You did apply it to payroll. If you did try to hire an employee back who wouldn't come back for whatever reason, or if you tried to give them more hours and they wouldn't take it again for whatever reason, you show that you made a reasonable, good faith effort in writing to do that, and you're going to be fine.
Hey, Steve, would you talk to us a little bit about EIDL? Because EIDL can be a deduction, or EIDL can be used for different purposes. We didn't have many EIDL loans in our portfolio that were intervening, but talk a little bit about how EIDL is going to affect the calculation moving forward.
Gotcha. So the only time EIDL is going to come into play is if someone applied for an economic injury disaster loan or EIDL from the Office of Disaster Assistance, and in that application, part of the use of proceeds or the justification was for payroll. In that process, what's going to happen is the EIDL advance that you received, so that's either going to be $1,000, $2,000, $3,000, $4,000, $5,000, $6,000, $7,000, $8,000, or $10,000. It's going to be one of those amounts. That amount is going to count against your eligible forgiveness amount. So basically, your forgiveness is going to be reduced by whatever your EIDL advance amount was.
A couple of comments that Jessica, this one is for you. When is the forgiveness paperwork due for the bank?
So my plan is to begin working with our customers immediately following their 8 weeks, and that we really need to expedite that process and get it turned in as quickly as possible.
Okay. So the issue is that you're going to coordinate now. Again, 200 of you on this call are our clients, and some the others are clients of ASAP. But generally speaking, we're going to coordinate. We're going to try to communicate with you about a week before this is due. Obviously, we're talking to all of our customers on a weekly basis, but I think that you're going to start pulling your documentation together a week before your 8 weeks is up. And then again, there's alternative ways to look at it, and maybe your payroll period extends 2 weeks beyond the end, and you have your 8 weeks. So I think it's a fluid question about when that's going to happen. But generally speaking, be ready to document starting the end of the 7th week, and if it's 9 or 10 weeks in total to get there. And Steve, I'm going to ask to make sure you're comfortable with this. If it takes a couple more weeks to do it, we can retrospectively look at that. You're only going to pay a 1% interest rate if it takes you 30 extra days to do it or 20 extra days to do it. So the cost of of failing to get immediate forgiveness is relatively modest. Any comment on that, Steve?
Yeah, absolutely. So the SBA is actually going to give the lender 60 days from receipt of the application for forgiveness from the borrower. So the SBA is being very, very generous. What they're looking for as far as time, honestly, is making sure the most important part is that application time period for your initial application matches up with the document and justification for forgiveness in that same 8-week period. So as long as you've got like matching on that time period, if you miss a deadline by a day or two, that's not going to be a cost that's going to be significant at all. That's going to be low to no cost. Yeah, what SBA is more interested in is that you did receive the funding, that you did use the proceeds in an eligible manner, and that you basically fit out the documentation that can be justified. As long as you've got all that, you're going to be fine. Again, this is an employee retention program. This is not a gotcha program. That's not what we're trying to do at all. We're trying to make sure that you are able to get that money and that you did use it for the terms that you certified for eligible use of proceeds and payroll, and then that you're able to show that.
One of the questions that came up, it's actually an excellent question, and I'll round the numbers. Let's say you had $100,000 in payroll going in, and for whatever reason, you're at $90,000 in payroll going out. Logic tells me that $10,000 is not going to be forgiven unless you have a well-documented resignation and refusal to return. Is that a fair comment?
That's exactly right. If through no fault of the borrower applicant, the business owner applicant, they're not able to maintain payroll, that is, the fault lie on the shoulders of the employee. As long as you've got that justified and writing, and you made a good faith, reasonable effort, again, in writing, you can show that, that's not going to count against you.
But on the other hand, if for some reason you just had a reduction in payroll, that is going to count in the sense that the forgiveness will be limited to the payroll that's paid. Again, it's about maintenance of effort unless there are extenuating circumstances, correct?
Yes, and here's the silver lining with that. It's only going to count after that 25%. So the SBA is not even going to look at the first 25% of reduction. The reduction that's going to count will be the reduction that's past that. For example, let's say that you had $1,000 payroll average going in, you come out with $700. So the amount past the 25% would be $50. Multiply that by the 8-week program, so that's $400 that would count against your forgiveness, not the entire 25.
There's some other questions about benefits that are not company supported. So if the owner is paying their health insurance benefits, but not paying for the employee, that's not an eligible with reduction, is it, or is it?
As long as it's part of the payroll compensation package, again, that's documented, it should be eligible from the business owner side.
Steve, we had a lot of questions because we have a lot of small employers as well that are, let's say, one employee or essentially the owners and their S-corps. And so a lot of times they can't get group coverage. They have to get an individual plan and treat it like a group coverage. And I think that question, if I'm reading into it, would stem from that concern that some of the documentation spoke to group coverage, where a group can't be created because they only have one employee. And so there's restrictions on them even applying under a group term.
Let me get back to you on that. My understanding now is that it will be, again, as long as it was offered and provided to all the employees and was as documented in 2019 as such. Mm-hmm. But let me verify that. Let me get back to you.
We also have a lot of questions on here about health savings accounts and employer contributions to HSAs, because a lot of benefits packages, employers have chosen to put their employees on high deductible health savings plans and offered up to make an employer contribution. Would those be considered under cash compensation, or would you consider those under with the health premiums?
I think you could show it in either category because dollar amount's going to be the same, correct?
Yeah, impact would be the same. I think their concern was just making sure they could include it somewhere.
Yeah, I believe you can.
Another process check. We're at 312 right now. We have over 100 and almost 200 people still on the call. So let's keep running. The quick question is, with respect to taxability. Basically, the question is loan forgiveness taxable?
Not that I'm aware of. That might be better posed to an IRS expert.
Yeah, let me respond to that if I could, please. Currently, the amount of a loan that's forgiven is not taxable. However, currently the expenses associated with the use of the loan, i.e. the payroll costs, the utilities and all the other things, they cannot be deducted as a business expense on the regular tax return. So the income is not taxable, but the expenses are not taxable either. So that effectively makes it taxable in the rate of around 25 to 30%. I know that's a little confusing, but the loan forgiveness would not be taxable. However, the expenses that were used can no longer be used as business expense deductions on the normal tax return. There's a lot of controversy around that. There's 2 or 3 senators that have proposed to change that through legislation, but currently that is the IRS's determination today.
Again, we continue to have a lot of questions. 2 questions. One is the FTE count, and I do think that FTEs are going to go up and down over the 60-day period of time. And again, the expectation is a maintenance of effort. So that if your wage is the same, leaving the forgiveness period as it was going into the forgiveness period or the 8 weeks, you're probably going to be okay. I think the challenge is if your wages are lower and you have inadequate documentation. So again, the question becomes, if you have somebody leave and you hire somebody to replace them, and all things being equal, your wages are basically the same, you're going to be forgiven. If on the other hand, your wages go down and you don't have it documented, you're going to have a challenge. Again, the benefits issues are traditionally any benefit that is related to payroll, 401k, flex spending, et cetera. Those things will count later in the package as part of the compensation to employees and will be in your 75%. Correct me if I'm wrong on that, Steve.
That's perfect. Perfectly stated.
Okay. Some people said, is an email declination of work sufficient? You know, as long as it states, hey, I'm not going to come back to work, I would imagine it will be, but it depends on the state of that. I kind of know who that is. And from a tutoring perspective, just directly ask your loan officer as quickly as you're able, and we can talk to you about that particular view.
Steve, are you, on the benefits side, we've been advising employers health, vision, dental, but what about some other benefit types like long-term care insurance payments that are supported by the employer, or some supplemental coverage or coverage types like you would see in an AFLAC? If any of those are employer paid or employer sponsored benefits, would those be included in that health insurance line, or is it just strictly health, vision, and dental?
No, those should, again, as long as they're offered across the board, and this is typical compensation for your employees, absolutely. So you're looking at payments. If they have a vacation fund that the employer pays into, parental costs, family medical sick leaves, allowances for separation or dismissal, payments for provision of employee benefits. So you're looking at your health care coverage costs, your insurance premiums, your retirements, state, local taxes, basically wages, commissions, incomes, earnings. If it's something that the employee enjoys as a benefit of employment and it has a cash equivalency, it should theoretically be included in eligible payroll costs.
If I could, this is Richard. I just want to highlight something Steve said just for clarity purposes, because there is a little confusion. State taxes has to do with state unemployment taxes or local taxes. For example, in Denver, there's a Denver occupational tax. But Social Security and Medicare taxes that are paid, employer taxes, those are not part of the calculations for the payroll compensation. There's a lot of confusion around that. I'll make sure people understand that.
Will you say that again, Richard? Because I think it's really important that we make sure that that is clear.
In the calculation, in terms of the payroll calculation, as Mark pointed out, it's all kinds of cash compensation. On top of that, benefits, including 401ks, the various insurance items. On top of that, there's the state unemployment taxes that are paid by the employer that goes into the state unemployment fund. Those taxes are part of the calculation. However, the employer's share of Social Security and Medicare taxes that are paid by the employer, that's not part of the calculation.
A lot of really good questions, by the way. This is
there's a lot in here.
You know, so many detailed, and we're so somebody asked the question: if you have an unused portion of the SBA loan, meaning you don't get forgiveness, do you have to pay that back, or are they able to keep and pay at the 1% rate? The answer is, if you don't pay it back, my understanding, and Steve can correct me if I'm wrong, if you don't pay, if let's say you have a $100,000 loan and $20,000 is not forgiven, you then are able to pay that $20,000 back over the total 2-year period that exists when the loan was made. Is that correct, Steve?
That's correct. And remember too, the first 6 months of payment will be deferred, but after 6 months, yeah, you begin making payment on that loan at that maturity and percentage. Yes, sir.
Talk a little bit about, we've had this a lot with seasonal places where you actually are building your employment back up to the June 30 level, building it back up. Say you lost people, then you put your employee workforce back together and paid it. So give us examples of how one could get back to where the employment level justified forgiveness, Steve.
Gotcha. So again, what you're going to want to do is take your initial application, whatever time period you chose to use for that seasonal time period, and we've got a couple of examples given for us there in the application. So you use that and then try and match what that's either already is or is going to be. And so as long as those periods match and you've shown that, then you're going to be justified in those expenses that you tried to cover. Did I answer the right question?
Yeah, I think so. The other question people have is that you don't have to have with respect to FTE, you can have partial FTE. A part-time employee can be covered as well. It doesn't have to be a full-time. The FTE count can be fractional as well as whole, correct?
Yes, and a couple of different ways to count that. You can either take your aggregate, basically count everybody up, divide your aggregate hours by 40 and come up with your FTEs that way, or your employees who have that 40-hour week, you can just count them as one and count your part-time as 0.5. Either way, do both. Whichever way benefits the applicant more, take that route, of course. but just be consistent with that calculation throughout.
So this is a frequent conversation. I'm gonna open this up. This is sole proprietor. I think that's been commonly there. So maybe Mark, you or Steve can calculate. It says when calculating the loan amount for sole proprietor earning over 100,000 average, the advice was to take 100,000 divided by 12 times 2.5. So you get your base. If the maximum allowable compensation is 15,385, this is only 73.85%. So how is a sole proprietor supposed to achieve the 75% needed to achieve full forgiveness? And I think this has been one of the more frequently asked questions because of the formula that gets you back to 73.85, not 75. That's a Steve question.
Gotcha. Yeah. So great question. So on that, what you're looking at there purely is that you're looking at your wages earned on that. So what you would want to do to get back to that full amount is also include your typical non-wage things as well. So you'd lump in your benefits or cash equivalents to get back from that 73 and change to 75, if you have it. If you're not able to show that, unfortunately, you're not going to be able to. That's what we're looking at right now.
Great. It's 3:23. Again, why don't I suggest that we continue until 3:30, and we'll go from there. We're down to about 160 people. Jessica, are you seeing anything that you want to weigh in on, given where we are in terms of how the bank would respond to some of these questions?
No, mine was specifically, I was going to go, oh, never mind. I think somebody said they'll follow up with her. I was just going to go back to Tamara's question about 8 weeks and 3 days, but no, I feel pretty comfortable.
And again, I'm as we do this, what I want you to hear from Steve White is that we're going to make every effort to be commonsensical. And the way you do that is by sharing great documentation. I know that seems anathema, in the trust me era, but Steve's point is well made. You're going to make an assertion. You're going to make an attestation in good faith that you've done everything you needed to. The bank's responsibility is to test your assumptions and to be allowed to look at your documentation moving forward. And so our goal is not to be difficult to work with. Our goal is to be your ally in teaching you to get the forgiveness that you're due. And our goal is to be your ally when you don't have forgiveness due, to protect you from the repercussions of overstating your compensation. But our bias, our success at the bank, we have told all of our officers, is by the percentage of forgiveness that we're given. And that's really critical to us. We're your allies going forward. And I hope you're hearing that from Steve. The objective is to create a process early enough and transparency that is great enough that allows you to manage your wage and other payments in a way that you get full benefit. Again, if you think about it, it's a tremendous opportunity to have 2 months of wage paid. And so we want to work together to get to that endpoint and not have it be disruptive to the business that fails. So moving forward, that's the goal. We'd like to get somewhere over 80% forgiveness by client count and far more than that by dollar amount moving forward. I do think the challenge will remain documenting those 16% of the loans that are to sole proprietors that need to have a special diligence about documenting what they've paid. Steve, any closing comments from you? Then we'll go through and we'll let Mark and Richard. So Steve, we'll ask you to sort of your conclusions. Jessica, I'll ask you for your conclusions. Then Mark and Richard will ask you to finish the deal.
Absolutely. But please know that, again, on average, we're looking at every single day there's another clarification of some kind, way, or another kind of thing. So this information that we have is first stab. I would anticipate that there would be some clarifications and or amendments to follow. So please, anyone, if you're seeing what we have now and you're thinking this is not going to work for me, I'm nowhere near the forgiveness amount, I would caution you to please let patience be your watchword as things do go out. Definitely, we've seen through the lenders and associations that if we can't get SBA and Treasury to give us the right information, sometimes we even work through our elected representatives who we citizens put in office to stand for us. It never hurts to call your elected representative and to explain your situation to them, because the point of this, as Doug stated, is this is an employee retention program. The idea is that you're able to keep your employees and to pay yourself during this program, this period of time, and then to use this program to have forgiveness for that, so that we're not trying to leave you with anything left that you've got to pay, if we can do it, if the proceeds were used for eligible costs. So definitely provide the documentation, show what you did, why you did it, and when you did it, and you should come out okay.
Jessica, your thoughts as the representing all of us who are going to be gatekeeping at the bank level with our employees, your thoughts about how that will work and how the process will unroll.
Yeah, so I would just suggest that you all continue to stay in touch with the lender or officer that's been assigned to you. We've been very grateful to Steve. He's been a great resource to us. So if you have a question that we don't know the answer to, we can definitely help track down that answer as well. And we'll stay in touch and work with, during that 8 to 9 week time frame, getting all of your paperwork from you to help you obtain that forgiveness.
And as we roll to Mark and Richard, I want to thank you guys. The question frequently is, will this be archived and made available? Will the slides be made available? My understanding to both of them, yes, but let you and your team, Richard and Mark, sort of point out the logistics of getting this information directly.
Well, thanks, Doug, for putting this on.
Yeah, and I just wanted to, this is Richard, I appreciate, Doug, your efforts, and Steve, thanks for being there. And thanks for talking about the tone of the forgiveness and the loans. We really appreciate that. As you well know, and as Doug pointed out and Steve pointed out as well, there is some pending conversation about changing that 8-week period to a 16-week period. There's a lot of small businesses that loans were made to that unfortunately were not able to hire employees because by government fiat, they've been closed. And so there's movement underway to change that 8-week period to either 16 or 24 weeks period of time. I would recommend you stay in touch with your elected representatives on both sides of the aisle, both in the Senate and the House, and make sure you know what's going on and what's pending, and voice your concern to them as well.
Also, this is Tracy with ASAP, just to answer the question about presentation and materials. We will be sending that out to all registrants tomorrow via email. So keep an eye out for that. Hopefully by tomorrow afternoon. I just like to make some updates to any of the PowerPoints and edit the video a little bit, and we'll get that out. And if you do not receive it, I recommend that you check your junk email or your spam box. And then we also will have information posted at businessasap.com.
Well, it was clear to me that all the very, very complicated questions were for ASAP accounting, and all the simple questions were for the bank. So we're grateful for that moving forward. But, you know, I want to end the way we began. And again, it wasn't intended to be self-congratulatory. This is a system that didn't exist 3 months ago. And there is a lot of uncertainty, and there will remain a lot of uncertainty in the our first forgiveness is going to be on June 10th, roughly speaking, for loans that we did in early April. So it is a fluid situation. There is some change, but I think the watchword that Steve White has taught to us as our lead SBA representative: use common sense. If you're maintaining your effort on your wages going out the same way you did going in, you should be in pretty good shape. There may be some fights over the margins, but there won't be a big surprise on forgiveness. We had one client who will remain nameless, who did lay off employees, chose to simply pay the employees while their business was closed in the hiatus. And obviously they're going to qualify for payment. We had another client who had the employees mostly gone by this time, who is then using this opportunity to rehire and build back up. And again, we'll work with them to determine how best to, and Steve, to justify the forgiveness. So it is different for everybody. And one of the reasons in America, what happened was banks that had 0.5% of all the assets in the United States made over 20% of all the PPP loans. Banks like us, a $100 million bank, we made 24 million in PPP loans. The reason is it's a highly manual, highly custom relationship. And so just count on that moving forward in order to communicate with the people who are going to try to be as flexible as we're able to serve the public and to implement the program the way it was intended. So thank you all for your participation today. We're gratified and humbled that so many people came aboard. We hope we can help finalize the end point of this as much as we began with the loans themselves. So very grateful to each of you. We'll look forward to your comment and questions moving forward. Do not hesitate to email your dedicated loan officer. And for those of you who are not Citizen State Bank clients, but are here in our region, we'll try to work with you to answer any questions you might have if you struggle with your local lender as well. We're all in this together, and we hope to see it through to the conclusion that is favorable to everybody. And with that, thank you all. We'll look forward to answering the questions that we're able to moving forward.